The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host, Mr. Whipple. Anyway, we've got a market that's up today. Of course, it was down yesterday. Probably be down Monday. Who knows? But we're up. I'm expecting that this market's probably going to pull back a little into the close out here. Probably a few people, why take the risk over the weekend? So I'm looking for us to come down to maybe 2070 for the close. That's pretty much where the volume just taps out. We talked about it at a great deal at 2108 on the S&P cash. And now it's pretty much the same thing. We've got 1.84 billion shares. So today's volume is not gangbusters. It's not even good. We should see if this was some kind of significant bottom. I suspect that we should have been coming into here with about 2.3 billion shares on the consolidated tape, but gap up. Not a lot of buyers once we got up about 2072, gone to a high of 2078. So it's not like we're that far off the top. I just think that a lot of people are going to think, why take the risk over the weekend? We've got a nice little bounce. We'll just exit. Not a big pullback, but a little pullback coming in. We had Janet yelling. Got to say that 3 times real fast. Anyway, she was out blabbing. Didn't really change the market that much. Everybody pretty much now starting to focus on 2 new things now that supposedly the Greek issue is over. I don't think it is. It's not over till I say it's over. And it's not over. Anyway, we probably won't even know if it's over on Monday. I don't know if you can say anything more about that. Right now, everybody that I can see is scared to death of what could happen in China. And, of course, right into earnings starting in earnest on Tuesday. So what's going to happen? Well, I can tell you, at least in earnings, what I'm interested in. And that is the fact that they've moved down earnings estimates a great deal. If they beat their estimates, come in line maybe a little over, what we will find out is a lot of companies are making a lot less money than they made last year. But they're selling for more money than they had last year. So in the last quarter, we went into it with a price-earning ratio of about 19, a 40-year high. Now, the question is, now that the stocks have pulled back a little bit, basically but the price earnings, or at least the estimates have pulled back, what is the new average or mean for the price earnings? Well, it's a pleasant almost 21. So even though stocks have pulled back a little bit here, what we do know is that the price earnings ratio is gone up. And that's if they meet their EPS, but that's all starts in earnest on Tuesday. We've already had a couple. Alcoa came out, big nothing. Last night we had one of the first big security companies come out. We'll talk about them today. But Barracuda Networks getting the huge prices right. Raspberry. It was down as much as 20%, and I think I actually put it on my board here. What's it off? 19.5% right now. So not a great deal out there. It had a little bump when someone who likes to be thought of as a knife catcher on CNBC said it was time to buy. It was overdone. And the problem has been a lot of these people have been doing this and pushing this on financial infotainment cable, only to be known as a pincushion the rest of the week. And a lot of people have to take back what they said about stocks only going higher. Of course, we at TFNN all know that stocks only go higher, just like housing prices. They only go up. There is no market when anything pulls back, and we have to thank the Chinese for that now. That is, all you have to do is make sure that 60% of the shares of stocks that would go down just don't trade. Therefore, the rest of them will have to go up. And, of course, we won't put that in the index. Actually, we'll fudge those figures a little bit, too. But what else? And, yes, when news breaks, I'm here to fix it. Thank you very much, and I'm done digressing and ready to move on.
Then it's all just a little bit of history repeating.
In 1991, Borland International creates a software powerhouse by buying Ashton Tate Corporation for $440 million. Kind of interesting, of course, Microsoft was really getting into the suite software, going up against Lotus and Ashton Tate. This was pretty much when it looked like Microsoft was going to clean their clocks, and Borland and Ashton Tate thought that they would all get together. Analysts declare that Borland now has a dominant position in Microsoft personal computers, and Chairman Bill Gates says, my largest concern about price competition comes from Borland. Over the next 3 years, Borland stock loses 3/4 of its value. It ended up being sold for total of $75 million, I think in 2005 or 9 or something. Borland was a big publisher of tools for programmers and still was, but Microsoft basically saw these big windows to go after, and also Microsoft didn't want to have to have and or show source code outside of Microsoft before they were ready to start distributing it. So they started a division in their own company called Visual Studio, which went after Borland's core market. And of course, Microsoft Office really started to gain traction and blew away the Ashton Tate part of it. And like I said, by 1994, they were a shell of their previous selves. Anyway, that is the new Windows 10 over on another computer that is winking at me, if you did hear that. Did get the latest version last night, installed it this morning while I was working on the markets, got it up and running. There are no changes in it, which makes me think that this is probably the one of the last candidates for what they call release to manufacturing. That means that they're ready to send a copy out to people like Dell and Lenovo that are going to put it on their machines and start shipping it out. It will be available, I think, the 29th of this month. At least that's what they're saying. And it certainly looks like it's done. Pretty polished. And I think I've got the copy that's going to go to release to manufacturing. They cleaned up 300 bugs last week. Supposedly, this one cleans up about 20 of them, and there's about 10 new icons. And I haven't had a chance to go through it. I will this weekend. But I'm really ready to move on from Windows 7, mostly because there's a lot of new features for programmers, and I do a lot of tools and programming for my market operations. And you just never know what you're going to need and what you're going to use, but there are a ton of new things. One of the things I really like about Windows 10 is a lot of the new security features. We were talking about that in the den yesterday. But on this day in 1991, a match made in hell and eventually to go and circle the drain started with Borland. Eurozone was up 3%, almost, on the DAX. FTSE was up 1.4%. CAC up 3%. And of course, this was all on speculation that there is a deal in Greece. It is far beyond my scope of reasoning, but I do read a lot of the magazines in Germany, I think it's far from a fait accompli that any of these people are going to go to the German parliament and vote for this thing. There's a great deal of the parliament that is not in the pockets of all the banks, as they like to say over there in Germany. These people want to be reelected. And it has gone from a decent simmer to outright hatred in the German outerland, outside maybe Munich and Berlin, to downright hatred, because these guys are all looking at working to 62, and they're going to be giving their tax dollars to Germany, to Greece, so they can all retire at 50. Remember, that hasn't changed. And as far as I know, there still hasn't been anything passed through the Greek parliament yet today, because basically all those guys are going to have to sign off on a deal where they would not retire till 58 now, 8 more years. And I don't know how many people are going to sign up for that. If you're a politician, it's basically, you know that you will not get reelected. And whether it's in Greece or whether it's in Germany, and I've read a great deal about a lot of the peripheral countries, the Finnish, Norway, a lot of the other countries, they want to have nothing to do with it, and they are big socialists. So I think it's far from a fait accompli in that, and we will see. My guess is one or the other are going to balk over the weekend. I don't know if this is even going to start moving the market anymore. I think a lot of people are starting to move on to just Greece and earnings, and this may be a great deal of nothing by the entire time we've moved on to real problems. The money that was lost in the Chinese downturn already makes the Greek money that they're talking about a drop in the bucket. We're talking about an $8 trillion penny stock, i.e. China. And yes, I saw the emails. Everybody emailed me today the quote from the floor trader on CNBC who called it either execute or get executed. And it's a quite nice saying, but I mean, there's a lot of truth into that. That's even a lot more sinister. We also were talking in the den a little bit earlier about General Motors. And as far as I'm concerned, the big winner out here this week has got to be Google. They were the one company that just said, we're not putting up with this in China. We're out of here. We're not going to depend on it. But we continue to see stocks getting hammered from whether it's Yum Brands and their Kentucky Fried Chicken in China, or this today General Motors saying about how bad sales were. Of course, that's the rumor on Apple. Apple's up a little bit today, but it did blow through its previous low yesterday on volume. So this thing is probably going to go down to 115 now. It's up, $3.40 today at 123.46. But my guess is this thing's probably headed back down to the 115 area now that it broke the previous low and on the extensive volume. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Pesavento, Thinkorswim, David White, Andy Hecht, and Daryl Martin in crystal clear, high definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Bring me the head of the false prophet, Jim Cramer.
Well, I'll probably play that into the ground until you're sick of it. It still makes me laugh every time I hear it. And if you missed yesterday's show, it's just, we had a famous late night to-be host who riffed on the whole problem with the New York Stock Exchange. And that was part of a little 2-minute funny thing. Oh, somebody said they lost my chart. Well, we will find it. In fact, hang on a second here. Why would my chart would be lost? Hard to tell. Anyway, we've got it back up there. Okay, we're into Asia. Of course, Nikkei was off a little bit, 0.4%. Shanghai up 4.5%. Hang Seng up 2%. But again, that's on only about 60% of the shares, I think, trading. It's real hard to find out exactly what they are, what was, and what isn't. There's a lot of contradictory news coming out of Asia. I've been on their back for a long time that you're in a rigged game over there. It's very hard to see what's going to happen. And the real question is, we did get some numbers anyway out of what's happening in Asia. And at least in the China markets, we know that 80% of the traders are retail traders. This isn't a lot. This isn't a market of experienced traders. And I've talked to, and over again, about one of the few economists I actually like. His name was Vernon Smith. If you Google him, you'll find him. But he's one of the few economists that actually used real money to do tests. did a lot of testing especially with people without a trading background, and how they created bubbles and what happened to those bubbles. But he used real money, and they got to keep it if they did well. So that they had motivation in there. A lot of theoretical economists out there that just a bunch of windbags, because there's no way to prove their theories. It's kind of like arguing how many angels can fit on the head of a pin. Well, no one's going to have the right answer. I did talk to Andy Heck yesterday about something that I thought about. And one of the things you should think about trading any China stocks now, and that is that these are very experienced people trading, and you're trading against them. But not only that, there just aren't that many even experienced people over there in the hedge funds and regular retirement funds, a lot of that stuff. No one knows if they're real or not. No one knows how much money they have. The accounting is iffy at best. But it made me think of when I was playing poker a lot, 10 years ago. And I was playing a lot just at local bars and stuff at night. They'd have little tournaments. We'd all go up there and play for, a couple of rounds of no limit hold'em. But there's a term that those folks use when somebody acts like a jackass, wildly betting left and right. And occasionally these guys will hit and run and just take out everybody. Very experienced players by acting like a jackass. They actually call these people in Las Vegas that where people, real professional poker players are, they call them donkeys. Because, of course, they can't call them jackasses without getting in a fight. And I talked about that for a little while. I think one of Andy's articles this weekend is going to be about donkeys in China. And that's what it applies to. But just be very familiar that we've seen the kind of movements out here that we saw exactly the same way and roll out very much the same way as we've seen in the dot-com bust. The difference is we've got the Chinese government involved in it. And the reason they're involved in it is they don't want a armed insurrection. Everybody and their dog apparently is now involved in the stock market over there in one way or the other, or at least anybody with 2 dimes to roll together. Even the farmers that are making 50 cents a day have pooled their money and gone into the gambling dens, otherwise known as the stock trading facilities out there. And I don't think this is over yet. In fact, a lot of discussion over the last 24 hours has been, will the government of China push the Chinese markets into the third bubble in not 6 months or a year? Because we've had several of them already. And I don't think that there's anything new in this. The question is, does a market trade with a few stocks that are the last few stocks remaining? What happens? Is just everybody's money tied up in it? Where does it go? Money heaven? I don't know. The return of your money is more important than the return on your money. Thank you, Will Rogers.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're like me, you're always looking for ways to diversify your financial portfolio. Everbank's innovative Market Safe CD can help you diversify while protecting your principal deposit. In fact, Everbank unveiled a new 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. Metal prices are currently low, so this CD could really deliver. Consider the facts. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. No annual percentage yield or periodic rate of interest is paid on the CD. Intrigued yet? The July 9th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And for crude and energy markets out here, it doesn't look any better today. We got the rig count, and we found out that we had 5 more oil rigs here in the United States back in production. That is the second week of additional production. We also have a lot of people that thought that they were going to put crude in ships and drive them around the oceans for a while, wait for the price to come up, and then drop in and make a bunch of bucks. They've kind of been washed out, and from the news in the ports, it looks like they're all fighting to get in to be first, to be offloaded, so they won't have to pay any more money on their giant loser of a trade. Probably why we saw such a hammering on crude the other day. Now the deal is just to not lose any more money by having several days of these guys wandering around in the oceans before they offload their crude. And so we're probably going to see the next few days a lot of those ships that were holding crude probably sitting empty and or moving around a bit. But not a lot of movement in crude today. I think it ended up, 52.75 or something. In commodities also, the other interesting move was copper, which is down 0.5%. That does not show any real big change in demand for more production of anything. So still looking at crude down here at the lows, but we get one more week of rig counts going up, and it's going to be very interesting to see how crude goes any higher with all the additional supply going on. Again, I guess maybe you could see something big blowing up in Iran, maybe causing a few-day movement. But the known fundamentals are continuing to get worse for crude prices, not better, with the rig count out here today. And that's pretty much it for that. You can give me a call at 877-927-6648. And we'll see. Crude's, the market's moving up a little bit out here. 2077.60. Just no volume again. Just 2 billion shares as we crest the bottom of this hour. So this is going to be a very light 27-point move if we closed right here on the S&P cash. But 2 billion shares as we crack 230 in the day says we're probably going to be doing about 2.8 or maybe about 1.25 billion shares less than we did on the way down. But this is not any different than what happened before. Everybody said we were going to break the highs. We didn't. We went to that 2108 level. All the volume died out. It took a week for everybody to try to keep pushing the stock market higher. We found that not only ETF were being redeemed, but a lot of the big men of Wall Street and hedge funds were selling into it. I suspect that they are going to be back at it as a lot of people nibble at these highs once again. Again, I'm thinking this is kind of the way that this market's going to act the rest of the summer and probably into September. And that is everybody's going to think, oh, this market was okay. Oh, this market's okay. And then one day they wake up. Now, I could be wrong, and I normally am. But when I'm wrong a little bit. And when I'm right, like this week, we take some major coin home to the bank. So I will continue on. Also, I will be in the 4 o'clock hour talking technology for Tom O'Brien this week, who is still out. He'll be back with us on Monday. So if you have anything you'd like to talk about, make sure and email me at path@tfnn.com or give me a call during that 4 o'clock hour, and we'll talk about it. Yesterday, we had some discussions about Apple that are popped up today, but I think we've got a little bit more news in the general field of technology that's very interesting. Anyway, one of the things I did want to look at is these 3D printer companies. And the reason why is that there was a major upgrade from what is it here? Let me go back to this. A major upgrade by some broker dealer. I don't know who it is, and I really don't care. But I've been talking about these for a while. I know a lot of people are going to start getting interested, and we're probably going to see some movement out here. But these are stocks that were 97 bucks, and they're 16 bucks now. I think I said it before, but I'll say it again. When stocks get hammered like this, do not look for a V bottom. Now, maybe you're trading intraday or something like that. That's fine. But I'd say 95% of the time, when someone gets a slaughtering and they're down, to 1/5 of the price that they were a year ago in stocks like DDD and 3D and SSYS and some of the other ones, X1. One of the things you really want to look for is that consolidation. If these stocks are not going to go out of business, they're going to go sideways for a while. And the farther they get hit, the longer you should look for that consolidation. My guess is that we could be looking into Christmas before these things finish their consolidation. And of course, the longer the consolidation, probably the better move off that bottom. Gold had a 10-year or 12-year move where it did nothing. And when they come out of that, that's where you make a lot of money. So I'm looking at these as possibilities of making a ton of cash, but I just know it's not going to be today or tomorrow. Most likely it's going to be a while. And I guess a lot of people sent me a lot of hate mail when I wasn't a giant bull in the gold market. But for the same reason, I'm looking at that. When you go from almost 1,900 bucks to 1,200 bucks on it, you get a consolidation. It is of some time, and it is generally proportional to the amount that you pulled back. And if we look at SSYS, We were short this one in both newsletters off and on. It doesn't look that bad, but guess what? It doesn't mean because it's done going down that it's going to go up. And that's what you got to look at. But now, one of the things I do like about SSYS more than anything else is it's got 3 gaps out here. So this could be one of these 3 gaps in the reverse side of this. Now, everybody's going to just say, hey, we had 3 gaps, it's got to go up now. That is not the way that these stocks work, and or 3 gap plays to the downside. They consolidate for a while, and then, you know, this is basically meets almost all the qualifications for big gaps down. But where this thing came off the highs, let's say November 3rd of last year to today. So what are we talking about, that 8 months or something? 9 months? You know, you're going to think that this thing may spend 3 months. It may be September, October. But this thing will probably base out somewhere at some price. And then you want to grab it. And this one is probably one of the more interesting to me out here. So keep an eye on that. As always, you can email me at path@tfnn.com, as Mr. Ocean did, who said Art Cashin's comment is what he likes to say is China says rally or get executed. I'd like execute a buy or get executed. We've got Victor from Paramus, New Jersey today on Intel. How you doing?
Yeah, I remember when you said Intel was a good buy at like 23, and then all of a sudden you said you would buy it at 23. It never got down to 23. Now it closed one gap. It has one more gap. Would you touch it right now? With earnings coming out Wednesday, is it going to close that gap? And there's a lot of volume. It's like there's 3 levels at 29. Is it going to close that gap at 27? It got from 27 in June of 2014. Is it going to close it?
I kind of like it here. I think
it's going to close that one gap or not? There's a lot of volume there, 123 million.
No, you mean down to $28?
Yeah, no, there's a gap on last June, like from 27 to 29. Is it going to close that gap?
Let me zoom in here a little closer. But you're talking about what is that, June 13th of last year?
Yeah,
or is that July 13th? July 13th of last year when this thing gapped up on 122 million shares. It's got in about halfway. Normally, the first question is, I'm going to buy it. The answer is no, because there's not, I'm not going to buy it for a 10% move higher or even a 12% move higher. There's just not enough meat on the bone for me. Mm-hmm. Some people would buy that, but I'm not. I'm looking for stocks that potentially have 30, 40, 50% moves, whether it's an ETF or some of these others. So just not enough meat on the bone for me now, but not a bad setup out here if you're looking at it. Normally what you want to see, especially with this kind of volume, if it comes back in there with like half the volume, if half the gap is filled, I generally think that that's okay. Now, the only thing I can say is that they still are a monopoly, and if the market's going to go up, this one's probably going to do fairly well. I think it will probably do better than the rest. I still think we're probably headed down through September, though. I mean, in the general market.
Then, if you're talking that way, Wednesday the earnings come out. They're going to be like Micron's earnings. They're going to suck for some reason. It'll probably close that gap at 27. That's when you buy. Well,
maybe, yeah.
You don't think it's going to gap down, or you think it's going to gap higher?
I think it's probably going to move slowly. This thing hasn't really gapped a lot.
Up or down?
You've got 1 or 2 gaps out here, but I think most of the gappy news is out of this company now.
Where do you think it's going to go down? A little bit lower or not?
I think I think it would fill the gap. I think that the market's headed down to September. So even if you bought this, and it was bullish, it wouldn't go up very much. So again, like I said, I'm thinking that this one has a much better chance of being a rally in September that is significant and probably going to go down less than the rest of them. I mean, Intel, Microsoft, Boeing are the stocks that I think are probably going to go down the least of these.
So you're saying it could go down to 27 and close the gap? Then it'll look nice if it closes that gap.
Yeah. I just, again, like I said, I mean, if this thing bounces, probably going to bounce to just under 32. That's not enough for me to get excited about buying it. Will it eventually probably get back up to that gap in the 36 area? I think it would. So maybe a $6 play would be there. I would much rather buy this thing in September around these levels than buy it now around these levels.
All right. Thanks.
Okay. Yeah, it's not a there are a lot of good looking charts out here in the market that on volume look pretty good. The problem continues to be I do not see a lot of these coming and getting a lot of love and a lot of volume. They bounce a little, the whole market comes up a bit, and guess what? The next week we're right back into selling them. 2079 on the S&P cash, up 28 points, but talk about no volume. In 10 minutes we had what? 400? What is it? 100 and some odd million shares, and it's just ticking by. Looks like a slow motion clock. Not a lot of volume. 2079. So maybe we are having a little bit of a short squeeze into the close. But again, we'll go back and say, let's keep a close eye over the next few days about what volume looks like above 2070 as the market is above it. And if it just goes back and withers on the vine again, my guess is we're just headed back down. But I think this is the pattern of the market. We're going to have some big moves down. We're going to have some pops up. They're going to be on light volume. They're going to hang around here for a while. And it's probably going to be a lot of people sitting on their hands that are making big money on the way down, and a lot of people getting chopped to bits if they're trying to trade over a few days. They'll get a lot of signals that say buy. Then the next day we're down 20 or 30 points. The next day we're up 20 or so points. Just too much headline risk. Probably either a long-term view or a very short-term view is what you need. I don't think that there's a lot of inter-term view, a medium-term views right now that will make a lot of cash in these markets. Anyway, we will continue and persevere on. Anyway, we looked at SSYS. What else do we want to look at? Now, we're going to look at some of these other stocks that are moving out here. A couple of them out here, like I said, not all that bad, but a lot of these things look like that they could be in some trading ranges. I just don't see, especially stocks like Rigel Pharmaceuticals, RIGL, I just don't see the love now that we got down here. How many people are willing to buy this? February 23rd, this thing gapped up on 15.5 million shares. It's back into it with literally 400,000 shares a couple of days ago. Yesterday, 445,000 shares, 152,000 shares today on a little doji. And maybe it's going to come back and fill this gap a little bit more. But again, we had a lot of energy on this leg down, and that does not mean an instant V bottom, and that is what concerns me at the moment. NXPI, another one out here that we're going to take a quick look at. Of course, we talked a lot about the semiconductor stocks giving a very huge signal that a top was in. NXP, of course, NXPI did that. Gapped up with monster volume, of course, on the 3rd of March. But it went up and made a 3.4 million share high on March 23rd. We went through that with 2.7 million shares, back right back in, and it's done nothing but head lower since. Go back into this area. You could buy it here. Again, I want to see some love, and I'm just not seeing it in these stocks. We'll be back in a minute. Give me a call.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we had a question about JP Morgan and what I thought about it, and that would be, if this thing closes back below either the 9-day moving average or the 3x3 displaced moving average over the next few days, just three or 4 days, then this thing would have a major sell signal on it. You don't have that signal yet, but any close below it would be pretty much what I've seen in a great deal of the stocks. If you listen, 10 days ago, I think you probably heard us talk about all the double repo patterns that we were seeing in China and why we were short China. This little bounce out here is very important to the markets. If you're a bull, what you can't really see, or at least for this pattern not to develop, is a significant pullback. Now, we're in options expiration now. Normally you see the low of options expiration on Wednesday or Thursday, which we saw, about 2050 or so. I don't suspect that we're going to fall apart next week. I suspect that as soon as options expiration is over that we are, but I think we're probably in some kind of trading range between what we're seeing now, 2080 and 2050, probably through next week. A lot of it's going to be dependent on how much money companies make, especially in earnings starting in earnest after the close on Tuesday. So probably going to have some decent volatility out here. I suspect that a lot of the numbers are going to be fibbed just a bit or totally roasted But I think what we're really going to be looking at are those revenue numbers, which are hard to fake. So that's going to tell us a lot about what's going on in this market. Again, we're coming in, and if they make the estimates, we're probably looking at a PE of around 21 or 22. Historically, the high 19s was a 40-year high. If we come out of this and do go higher, without some major revenue and earnings growth over the next week in earnings, let's say 10 days, we are going to have the highest priced market in probably 60 years. And that will tell you a great deal. So just know that up here, you're going to have all these stocks priced for perfection. Wanted to talk a little bit about Barracuda. I think we'd start that at the beginning. And of course, the biggest thing and the reason I'm not long these security stocks, although they all did look and have great bounces out of them, was this. And that is, it is still incredibly hard to see these companies making money. Barracuda swung with a loss. It just seems like security is the absolute last thing that CEOs will spend money on. And it's still this way. I think there was probably a time between 1985 and 2000 where only the smartest of the retailers would have CCTV cameras in their stores. Now everybody pretty much has to have them because they're going to get sued out of existence. I think the exact same thing is going to happen with these companies. There's going to be a law passed. There's going to be something. It will be a sea change. And these CEOs will not be able to just avoid it like it doesn't affect them, whether it's the government, whether it's Target, or any of these other people that have been hacked and all the credit card information has gone out into the ether. They continue to be problematic in the fact that these CEOs just are resistant to spend any money that they don't I think maybe it may be two things. One, they're looking at spending money. Two, they don't understand why they have to spend the money. But it is always the thing that they spend the least on, which is security, just about on everything. Whether it's people stealing stuff from the store, it's just one of the things they think that they have to live with. I don't think these are acceptable losses. Anyway, see you Monday. Same bat channel, same bat time. So when you can, not when you have to.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.